This is your weekly real estate update for the greater Portland, Maine area. These are closed sales in the last 7 days, median numbers. So the days on market went up just a little bit to 8 days on market. The sale to list ratio still at 100%. Sold price climbed back up to $532,000. Moving on to your national benchmarks, we made a little bit of progress here, but we also lost some progress. So the 30-year average interest rate continued to climb to an 11-month high of 6.55%. Your year-over-year appreciation of real estate at 0.7%, according to Case Shiller. And inflation did come back down a little bit to 3.5%. This week's spotlight is focusing on really understanding loan options and why that's important for both buyers and sellers. So I kind of have just two different perspectives there. As a buyer, it is really important that you don't assume the loan, you investigate it. And as a seller, it's important that you don't judge the loan, that you understand it. Buyers, most people in general, when they think of a mortgage or a loan, they think of 20% down conventional, and that is what they think is available to them. For buyers, there's a myriad of other programs available. It really depends what your needs are. Are you trying to buy a fixer upper? You might need a different kind of loan. Are you trying to buy something using your income? You might need a different kind of loan. If you're trying to buy something using the rental of that property, you might need a different kind of loan. If you're trying to buy something using your business's monthly bank statements, you might need a different kind of loan. If you're trying to buy something with very little amount down, you might need a different kind of loan. So there's tons of different options out there, right? And you really need to look into that to see what is best for you as a buyer. And then you need to choose that program. And you might even be working more than one, depending on the home you're looking at. For a seller, equally, it is important that you don't just receive offers and think, I want 20% down conventional. That's a good loan. You need to look at the broad picture. A buyer might be asking for closing costs, and that might feel negative to you. When I bought my house in 1985, we didn't do that, and I don't know why the buyers are doing that. Really, what should matter to you as a seller is the bottom line and the stability of the deal. If the loan is not necessarily one you're familiar with, but it still gives you a better bottom line and the deal still looks stable, it's going to work for everyone involved, that's what you should be focused on. So really, as a buyer, again, don't assume the loan type, investigate it. And as a seller, don't judge the loan type, understand it, and make sure that the one that you're accepting is really going to give you overall what you're looking to achieve. And keep in mind that from house to house, it might not be the same thing. You might move the interest rate on one house, but you don't on the other. You might go above asking price to get closing costs back on one, but not on another. You really need to look at these individually. You really need to be working with an agent and a loan officer that's willing to put in the time and make sure that that offer, that house, that seller, that we understand it. We're looking at all the pieces, all the things that we can move to get the deal that's right for everybody and make it work all the way to closing. I hope this was helpful. Have a great week and let me know if you have questions.